Chapter 6, Channel Number 5, Investing in Stocks. Passive income opportunities are plenty, and what you can do with a little bit of investment is quite astonishing. Investing in stocks is one of the easiest ways to earn passive income, but it requires the most knowledge. As Warren Buffett, the king of the stock market trading, once said, "Risk comes from not knowing what you are doing." If you have in-depth information and know how the stock market works, you can be a champion. There are plenty of rags to riches stories related to investing. On the contrary, many people have gone from riches to rags. It all depends on knowledge and a bit of luck. Most of us do not have any idea how easy it can be to earn passive income. We tend to keep our hard-earned money in savings accounts with interest rates as low as 0.01%. What if I tell you that you can earn a minimum of $100 every month without breaking much sweat? Don't be surprised. It's possible. I am going to unravel all the secrets on how you can get started with stock investing and earn a great deal of passive income over time. The catch here is, you do not need to be ultra rich to create a cash cow. You just need to be efficient. Stock market and introduction. A stock market is a place which buying and selling of public companies' shares takes place. These financial transactions take place under the watch of formal exchanges or over-the-counter marketplaces that operate based on a set of rules and regulations. If you hear someone say that they are in the stock market, it means that they buy or sell shares or equities on stock exchanges. In the United States, there are three major stock exchanges, namely New York Stock Exchange, NYSE, Chicago Board of Options Exchange, CBOE, and the National Association of Securities Dealers Automated Quotations, NASDAQ. Understanding the stock market in lucid terms is very important. My first objective is to make you understand what a stock market is. People go to the outskirts of the city to buy Christmas trees or go to the local Walmart to get groceries. These markets are places where different buyers and sellers meet. There are numerous competitors in the market. The consumers are guaranteed a fair price. Now, if there is only one Christmas tree seller in the whole city, he can charge any price he wants, and customers will have no option but to pay the amount. But if there are multiple Christmas tree sellers, there will be a competitive environment, and each seller would think of ways to attract more customers. In that scenario, the buyers will have many options to choose from and enjoy the benefits of fair pricing. The same mechanism is followed in online shopping, where customer prices compare in different vendors before buying something. The stock market works on similar principles. Here, trading of various securities takes place in a regulated environment. There are multiple participants in this space. Fair pricing and transparency are given utmost importance. How it works. To speak from my personal experience, I was always wary of investing in stocks, just like many of you. But as I read more about investments and how to get started, I quickly realized that this is the correct path to earn money without putting in much effort. I could see clearly that the advantages of investing in stocks greatly outweighed the disadvantages. With the correct counsel, I suddenly started earning a little above $100 every month with an initial investment of just $2,500. My mantra was that I started by investing in index funds. Now, to tell you a little about index funds, it is the kind of deal where your investment gets distributed among the top 500 companies in the country. For instance, if you invest a total of $2,000 in index funds, then 4% of the total value will go to Microsoft, 4% to Apple, 4% to Amazon, and so on. However, you should keep one fact in mind. The share market goes up and down throughout the year. Therefore, the income you generate will also vary. Do not get disheartened if you are not able to get the return you were looking for. The key here is to wait out the downturn. Once your stocks climb up, you can earn big. So, it is best to get hold of a certain sum of money and invest it for a 5-year period at least to get the best returns. Stock markets offer a secure environment for market participants to trade in shares and other financial instruments with confidence. As per the regulator, stock markets work as primary and secondary markets. In the case of primary market, the stock exchange lets companies sell their shares to the common people for the first time through IPOs or initial public offerings. This is the first step that a company takes to generate capital from the investors. What it means is that a certain company divides a part of its worth into shares, say 30 million, and offers a part of them, say 10 million, to the common people at a certain price, say $10 per share. To offer its shares, a company needs to find a marketplace. The stock exchange offers the marketplace after successfully presenting their IPO offers, and if all things go according to plan, the company will have succeeded in generating $100 million worth of funds by selling 10 million shares at $10 per share. After buying the shares, the investor can hold them for as long as they wish and wait for the share price to rise and make a profit by selling it. The company and its partners have to pay a fee to the stock exchange for its services. The secondary market, on the other hand, is a place where the buying and selling of all the listed shares take place. This market is also facilitated by the stock exchange. During the secondary activity, the stock exchange gets a fee for every trade on its marketplace. Nowadays, almost all stock market transactions happen online, and you can have access to all the information on company websites or stock trading applications. The stock exchange takes care of price transparency, liquidity, and financial fair play and all stock trading activities. A listed company may also offer added shares at a later stage through rights and follow-on offers. They can also buy their shares back. All these transactions happen under the watchful eye of the stock exchange to track the trajectory of the market. The stock exchange maintains some sector-specific indicators like S&P 500 Index, NASDAQ 100 Index, Stochastic Oscillator, and Stochastic Momentum Index. The stock exchange also supports other transactions-related activities like paying dividends. For instance, a profitable business may offer certain dividends from a part of its earnings to the investors. All such activities are supported by the stock exchanges up to a certain extent. Steps to succeed in market trading. Step 1. Research aggressively. If you see stock market trading as a game of lottery, then you will fail more often. If you think you'll become wealthy overnight by investing in champion stocks, then you'll fail more often. You cannot learn everything about stocks in one day. It requires aggressive research and careful observation. I want to win big. To win big, you have to study hard. So, read every book you find on the stock market. Check well-written articles online and get to the bottom of it. When you have finished researching, research some more. If you are not a fan of reading, watch videos of stock market champions like Warren Buffett or Philip Fisher. You can listen to audiobooks on stock trading. There is no excuse. There are unlimited passive income opportunities in the stock market trading. Once you understand the pulse, you'll multiply your wealth in no time. Step 2. Invest wisely. Investment should not be done on an impulse. The wisest thing you can do is to invest in something that you understand. Warren Buffett once says, "Don't understand a business, don't buy it." If you follow his interviews, you'll understand that you have to have an in-depth knowledge of a business before investing your money in it. You should not just blindly follow others. The stock market offers you innumerable choices, and if you manage to make the right ones, you'll be successful. So, if you are working in the artificial intelligence AI sector, you'll have a better knowledge of the market trends and potentials of AI companies. So invest in those companies that you know most about. Step 3. Devise a plan. Learn about the stock market can be pretty challenging. There is a sea of knowledge out there. Do not get overwhelmed. All you need is a plan, and I am going to tell you all about it. Start by analyzing your capital resources and the risks involved. There are certain risks related to stock market trading. You need to be proactive. Compare your expectations with your financial assessment. This will help you come up with a definitive strategy. A good overall assessment can also help you come up with a suitable backup plan. Set up small goals of investment and work toward achieving them. Step 4. Invest only residual funds. Investing in a company is nothing like putting your money in a savings bank account. Investing in stocks is a risky business, and you have to be very careful. While investing, it's better not to think about the best case scenario. You invest in stocks because you want to gain more profits, but there is an equal chance of losing more. So, do not invest your hard-earned monthly salary or savings. Invest only in surplus amount that stays with you after securing your monthly expenses and savings. So, take out your pen and paper and analyze your monthly investment budget and risk appetite. Step 5. Avoid timing the market. Do not try to time the market. You may have done your research and feel confident about investing in some stocks at the right time. This overconfidence can make you lose money. You may get lucky once or twice, but eventually you'll lose big. So refrain from predicting the trajectory of the stock market and focus on those stocks that will give you solid returns irrespective of market drops and crashes. Become a millionaire by investing in stocks. Trading in stocks can make you very, very rich, but you need the correct skills and mindset. I am not suggesting that you will become a millionaire overnight, but you will follow the secrets of the stock market kings. You will develop a habit of making the right decisions more than the wrong ones. What are those secrets? Let's take a look. If you are just starting to focus on the hot stocks, perform all your research on those stocks to find out their trajectory and potential. Go for those stocks that you believe in and know well about. Try short selling too. There is no hard and fast rule that you have to hold on to your stock for a long period to make a good profit. There are plenty of intraday traders out there who manage to make a solid profit by buying and selling shares on the same day. So, short sell your shares when the time is right. There is a common saying that if you are going to the stock market, you should leave your ego back home. You may face significant losses down the line, but you cannot feel disheartened and give it all up. So try to cut your losses and just move on. Get hold of the profit or at least part of it when you want. You never know when the market is going to go down, so enjoy some profits while you can. You can invest the surplus profits in other stocks too. Invest in modern technologies. The world is changing, and it is changing fast. Groundbreaking technologies are coming forth, and you shouldn't be skeptical about them. Artificial intelligence and electronic vehicle companies are rising in prominence. These stocks could give you huge returns in the future. Try to invest in liquid stocks. These are highly traded stocks and have the capability of generating solid passive income. Do not believe in hearsay. Steer clear of big promises and judge the stocks by analyzing their trajectories. Do in-depth research on its current trends and future potential before investing your hard-earned money. The traditional concept of buy bottom and sell top is still quite prevalent. But doing that doesn't guarantee good returns. You have to focus on the capabilities of the stock. So many stock market experts talk about the importance of leveraging and diversifying. Do not just blindly follow what others say. You will not become a millionaire if you diversify and use leverage. Just have 2 or 3 stocks and invest 20% of your assets. Stock market investments give you good returns in a long term. Therefore, you need to have a proper plan. The majority of people fail to realize long-term gains of investment. That is why it is important to maintain a risk and reward profile from the outset. This will help you keep in touch with your investments and analyze the returns over the course of time. It might seem that becoming a stock market millionaire is difficult, but it is not impossible if you follow the secrets mentioned above and be a dedicated student of the stock market. Then you can make it possible. Just think of it this way. Once you manage to make all the correct decisions, the mistakes will cease to exist. So keep at it and never stop learning. Solid stocks to invest in 2021. Investing in stocks should be done with careful consideration and thorough research. There are plenty of stocks out there that could give you solid returns on investment. I will recommend some very good stocks for beginners, but you need to do your research before investing. Numerous other stocks hold great potential, but if you are just getting started, it's better to stick to companies that can sustain the ups and downs of the market and give you solid returns. So here are some great stocks that you can invest in 2021. 1. Amazon. In terms of revenue, Amazon is the largest company in the United States. With Jeff Bezos at the helm, Amazon earned $368 billion in 2020. That is 38% more than the revenue it generated in the year 2019. It is listed in the S&P 500 index and continues to make its presence felt in more countries. Given its track record, Amazon is the ideal place for your stock market debut. 2. Tesla. This is the most valuable car stock in the whole world. The reason why Tesla has been able to stay way ahead of its competitors is because of its vision to focus on sustainable development. It is also an S&P 500 company. The worth of Tesla will shoot up once more countries sign up for electric vehicles, EVs. So, if you believe in long-term investing, then investing in Tesla could be the right choice. 3. Visa. Being the leading payment processing company in the world, Visa offers strong return on investment. It is also listed in the S&P 500 index. Its groundbreaking innovations and rapidly increasing customer base make it one of the safest and profitable stocks that one can invest in. 4. NVIDIA. NVIDIA is a promising company that manufactures and sells graphics processing units for GPUs for gaming and artificial intelligence companies. The best thing about the company is that it offers dividends to its investors 4 times per annum. Considering the rise of cloud computing in recent years, NVIDIA's worth is going to shoot up in the years to come. 5. Walmart. Walmart recorded $523 billion worth of sales revenue in 2020. It is among the largest retailers in the world. It features at the top half of the S&P 500 index and is considered a safe bet for most investors. Like Nvidia, Walmart offers dividends to its investors 4 times per annum. So, if you want to play it safe and expect steady returns, this is the right one for you. 6. Netflix. Who doesn't know about Netflix? It is one of the leading online streaming platforms in the world. It is listed in the S&P 500 index and has a market capitalization of $220 billion. With its growing customer base, Netflix has all the potential to give you solid returns on investment. 7. McDonald's. Your favorite food chain has all it takes and gives you a good return on investment. McDonald's has 36,000 outlets in at least 100 countries and has a market capitalization of $175 billion. Like Nvidia and Walmart, McDonald's offers dividends to its investors 4 times per annum. It offers an annual dividend of $5.16 and is thus a darling to most dividend investors. 8. ServiceNow. With a market capitalization of $115 billion, ServiceNow is a leader in the cloud computing space. It offers its services to more than 6,000 enterprises around the world. ServiceNow is employed by 80% of the Fortune 500 companies. It is a growing stature by the day and has potential to yield solid returns for you. 9. United Health. It is the largest healthcare company in the world and has a market capitalization of $382 billion. United Health offers quarterly dividends to investors to the tune of $5.80. Impressive. 10. AMD. Advanced Micro Devices, or AMD, offers both high-end graphics and computing technology. It is a market cap of $120 billion. It is listed in the S&P 500 index and has a lot of potentials. You can generate a good amount of passive income by investing in this stock. You have all the information you need to get started with investment. I have laid down all the steps to become a successful investor and sincerely hope that you will follow my suggestions to earn a great deal of passive income. But I must tell you one last thing. Even if you have in-depth knowledge about the stock market, it is advisable to get in touch with a stockholder at the initial stages. Consulting an expert will help you mitigate your losses. It is important not to get carried away and take the help of an expert to stay in the game. So, do your research, consult an expert, and invest in the stocks. You understand.